I'm here with Rishi Khosla, co-founder and CEO of OakNorth Bank.
Thank you.
You're based in the UK. I'm not sure US audience is that familiar with OakNorth. I know you as being a little bit different than some of the other challengers out there. How are you different? What do you do?
Sure. So, I mean, look, we set up the business to very much focus on the SME or small, medium-sized business lending space, and specifically, I would say the medium and larger end of small and medium-sized businesses. So companies which are looking to borrow anywhere from $500,000 up to 25 million. And within that range, we just saw a really, uninspirational customer experience in terms of the commercial banks, one which hadn't evolved for decades. We developed our own platform to focus on lending into that space and decided to actually set up our own bank in the UK to prove through the model, prove through the platform, etc., which is how I guess makes us somewhat different, because we actually decided to actually build balance sheet in one market. So having done that, we've now licensed the platform out to banks in other markets, including in the US.
So it's a little different model. I guess from that perspective, who do you see yourself competing most closely with?
So good question. I mean, again, if you look at the space that we occupy, i.e. loans of, say, $500,000 up to 25+ million, that's the mainstay of, in the US at least, regionals and community banks. Very few fintech platforms, if any, have actually focused on actually trying to break into that part of the market. Most small, medium-sized business lenders within the fintech space focus on loan size of tens of thousands up to a couple of 100K. So I would almost say our core competitor is sort of the traditional incumbent regional community bank, rather than anyone from the fintech community.
Got it. And can you share with the audience some of the growth metrics? How many customers you have?
Sure.
Loan book, etc.
Sure. So we launched the business in September 2015 on our own platform in the UK. We have about $4 billion of lending. Overall on the platform, we've got just shy of $10 billion, so i.e. around $6 billion with the third-party clients. The business is growing by, depending on which part of it, but circa 100% a year. The business is profitable, which again makes us relatively differentiated. It took us 9 months to hit cash flow break even, and 24 months to pay back all accrued losses within the business. And within the UK part of the business, we've proven the ability to build a bank and actually run it at an ROE of 23%. We're targeting over 30%, and an efficiency ratio of 26%, and we're targeting an efficiency ratio of 16%. So in our view, those are pretty outsized metrics when you look at sort of normal banks.
So I'd like to shift focus now. You described sort of the bank business in the UK and this platform business that you're using to expand internationally. From the technology you've built, the AI and ML, machine learning you've built on the underwriting platform, can you provide some evidence on the performance of the portfolio?
Sure. So like I mentioned, we've lent, our current loan book is about $4 billion. We've lent probably about $4.7, $4.8 billion so far. The credit experience has been pretty strong, i.e. we've had no defaults on the book, we've had no losses on the book. Clearly that's a hard record to continue on a go-forward basis, so we will have losses, but the fact that we've gone through multiple years of lending with a reasonable amount of volume and have actually had no defaults and losses shows that we're doing something different. So going into a down cycle, we strongly believe that people who've licensed the platform, have lent through the platform, will end up with a much better overall loss experience than let's say standard credit underwriting.
Got it. And so now I'm wearing my banker hat. You're pitching me on licensing OakNorth AI technology to me. What differentiates you from other players in the market? How would you pitch me?
Sure. So fundamentally, I don't, when we pitch, it's not necessarily against other competitors, because as I said, we haven't come across another competitor who's focused in this market. The other competitors are focused on much smaller ticket sizes. So this is really about saying the ability to differentiate yourself in the market, to be able to do loans which, let's say, don't necessarily fit through sort of the very standardized and black-white type level 1, level 2 analysis, which standard commercial banks do. So through taking the platform, you're able to actually target and win business which other commercial banks aren't, and you're able to do that at enhanced pricing and at better credit risk. So you put that together, also at immensely increased efficiency for your team members. So again, if I just go back to our model in the UK, so the lending that we've done there, the circa 4.7, 4.8 billion, has been done with an average of 8 originators. Today we stand at 14 originators in that team, and an average of 3 credit people, and today we stand at 5 credit people. So the efficiency at which our teams run is just significantly ahead of what's normally experienced in commercial banks. So it's very much ability to target a market and grow your business at enhanced pricing with better loss ratios at higher efficiency.
Got it. And I think at the last round of funding, the company was valued close to $3 billion.
Yep.
What is your view going forward? I know a few of the speakers have been up here talking about IPO markets, public markets. Do you have any intention to go public?
So look, I mean, I think you need to have a reason to go public, clearly. Raising additional capital, providing liquidity to shareholders, for marketing, etc. Some of the sort of, I'd say, finance 101 reasons for going public. And I would say at the moment, we don't have the imperative for going public based on any of the standard factors which would push you that way. So at some point in the future, maybe, probably. Right now, today, after the last round of funding that we did, we are way overcapitalized, where we're sitting on a good few hundred million excess capital from what we require for our business plan. So fundamentally, we're not in a position where we need to go public.
I could think of a great launch party that we could plan with that money. Going back to the bank part of the business.
We're frugal guys, yeah.
No. Going back to the bank side of the business, how are you planning to grow the book, both from, I guess, acquisition perspective, new products?
Sure. So the one thing is that when you look at client acquisition, and I think that's, I assume that's what you mean rather than sort of acquiring another business.
Yes, client acquisition.
So when you look at client acquisition, our client acquisition cost is circa 1% of our year 1 revenue from a new loan, i.e. it's a negligible level. 80% of our flow today is actually driven by referrals. Because we're doing something which is so differentiated in the market, we actually don't have a need to spend on marketing dollars or overinvest in client acquisition. So the flow which we're getting to us is incredibly strong. Given that given that's maintaining a growth profile of 50 to 100% for the UK bank piece, we feel like we're in a good place.
You guys did something that surprised me. Doesn't really matter, but yes, you entered the mortgage business. So you had the small, medium enterprise lending business and launched a mortgage product. Can you talk about the reasoning behind that launch and how you intend to compete in the mortgage business?
Sure. So if you look at what we do in the small and medium-sized business arena, we're really taking complex lending, which is typically the preserve of sort of corporate institutional lending, and applying that through to small and medium-sized businesses. In the mortgage market, it's very clear that there are areas which are very inefficiently served, and those tend to be the more complex situations. So take a situation like me walking into a branch trying to get a mortgage. It's normally a pretty funny experience, i.e. Total inability to borrow from a bank, just because I don't have a standard income profile as they'd expect, and therefore I don't actually flow through any of their standard models. Taking individuals like that, i.e. the entrepreneurs typically behind the companies that we're lending to, and finding a way to actually create much more of a bespoke mortgage product, that's interesting for us. And that's using a lot of the same techniques, models, approaches that we've developed as we're doing the commercial lending. So for us, it's very synergistic. And again, it's not competing in the mainstream of sort of mass mortgages. It's very specifically the more complex mortgages. And that product today is just a UK product.
And I definitely appreciate how you guys have picked your spots to compete. You've communicated your intention to come to the US. Can you talk about what the strategy will look like here on the ground?
Sure. So, I mean, we've been in the US for about a year now. We've licensed our platform to banks in the US. We've also set up origination and transaction teams here in the US to effectively originate flow, to be able to provide that flow to people who actually are licensing our platform. So as a bank, you can effectively just take the platform, which can bring the efficiencies that we've talked about to your own organization. You can also choose, if you want, to take some of the volume which we're originating. As a non-bank, typically they take the platform along with the volume and find it a way to break into an asset class which they haven't necessarily been exposed to previously.
And what does that pipeline look like? You've been here a year. Like, what is it shaping up to? What should we expect next year?
Very significant growth from where we currently are. Well, from zero last year, yes, absolutely. Infinite growth, right? So we've had infinite growth in the last 12 months. How's that? But if you look in the next 12 months, I mean, we're in dialogue with some of the largest banks in the country, as well as mid-sized banks, super regionals, etc. So yeah, watch the space.
I think one of the techniques you've used in marketing in the UK is offering accounts with annual equivalent rates that are higher than the market. How are you able to do that?
So that's very much on the deposit side.
Yep.
So we're offering a slight premium in the market. I have to say, less of a premium than someone like Marcus offers in the market. But fundamentally, we're getting much stronger pricing on the asset side, on the loans which we're doing. So given the stronger pricing on the asset side, effectively, the spread is large enough where actually paying another 20 or 30 or 40 basis points on our deposits really doesn't make any meaningful difference to our overall financial profile.
And just recently also, you partnered with kind of a competitor, or at least another challenger bank, Monzo, on a savings account product. Can you talk about what that product was and how that fits into your growth strategy on the deposit side?
Sure. I mean, look, I think that overall, if you look at deposits, there's clearly the bricks and mortar approach, and then there tends to be the rate sensitive online approach. And our view was actually there's another market here, there's another opportunity to break open. And there are a number of players out in the market who have strong propositions which don't necessarily need deposits, but yet touch the financial affairs of a consumer. And our view was actually partnering with those with those corporations makes sense for us from the perspective of actually allowing an additional offering through to the consumers of those platforms. So for us, Monzo was a way of actually offering higher savings rates to individuals who wouldn't necessarily be our typical customer. And that's, again, something that we're building into the platform more widely as well.
I'd like to go back to a personal interest I have in the story. What was the genesis story? Where did the idea of forming OakNorth come from?
So there were a couple of things. So the business that my co-founder and I started before was a financial research company. And we started in 2002. In 2000, and we had no money. We'd raised literally a couple of $100K of friends and family money. So we were balancing pretty finely in terms of our own cash and working capital. So 2005, we were growing at whatever, 200-300%, and we thought it'd be really good to have more runway in terms of cash than the 3 or 4 weeks that we typically had at any point in time. So we went to one commercial bank, HSBC, to actually ask for a line of credit. We were told very politely where to go. We had that experience again with another commercial bank, and a few months later, we went to one of our clients, Citibank, to their special situations group, and we managed to do a dividend recap for 100 times the amount of debt we were looking for from a commercial bank. And we said to ourselves, something's wrong here. A commercial bank couldn't actually give us 100th of the amount of lending that we wanted to for effectively a working capital line into the business, but an institutional player who spent the time actually analyzing our business, created a forward-looking view on the business, actually was able to lend 100 times more, and that's also debt on the balance sheet, which was dividended out to shareholders. So for us, that was an eye-opening moment to show that actually something's broken, something's wrong with the way that commercial banks lend into this segment.
One of the things I've noticed, and we've written about this as well, is a lot of the challengers started with a monoline business, and over time expanded into other lines, and to the point where many of the challengers look kind of similar on the outside. And I think OakNorth has done a good job of kind of marching to its own drummer. You have a different model. Was there pressure on you from partners, from investors early on to sort of copy that blueprint, or I guess how easy was it for you to continue this?
Sure. So I mean, I think one thing which sort of benefited us massively is that neither my co-founder or myself are commercial bankers, so we don't come from this background. We really set ourselves up to solve this problem in terms of lending for small and medium-sized businesses, and we were always very focused on saying, how do we actually solve this horizontally across markets, rather than saying we want to build a fully integrated bank which does transaction banking, personal banking, etc. In the UK. So for us, the UK bank was very much just a means to prove through the opportunity to prove the platform, and then having done that, we'll continue to build the UK bank and continue to use it to obviously try sort of the leading edge sort of developments that we do to our platform, but actually taking the platform horizontally across markets and working with incumbent banks and other non-bank lenders is a much more scalable way for us to actually make a dent in the small and medium-sized business lending space globally.
So continuing along that horizontal theme, you're here in the US, committed to this market. What other markets are you looking at?
So we're active, and we have clients in continental Europe, and then some of the Asian markets as well. Now that seems pretty spread. I was asked actually at an interview last week, so which other markets will we be going into? And I was like, I think for where we are, covering Asia, continental Europe, and the US and Canada, probably mean that we have our hands full for the foreseeable future. But again, there clearly are markets outside that.
I have a personal question for you, maybe too personal, but what has been the biggest challenge for you as a leader in terms of as your business scales, keeping up with that scaling?
Sure. So I think, just again, in terms of background, in our previous business, we grew that from 0 to 3,000 employees. We used a total of $60,000 in capital to build that business. And that was done over a 12-year period, so fundamentally a longer period than I would say, at least from a financial profile, than it's taken us to get to the same point in this business. But in terms of headcount, a much larger headcount than we have today in the business. So we've gone through a scaling process previously. Within OakNorth, the big difference is that at least day one, we were hiring a lot of people who had commercial banking experience, and and I hate to say this, but a lot of people who have commercial banking experience are taught not to take any risks, are probably taught that the best thing they can do is not very much, because if they don't do a lot, they can't get, there's very little downside. And you put that together, it's a hard DNA to bring into a highly entrepreneurial, high growth organization. And therefore, there was a lot of churning that we had to do of individuals to get the individuals that we felt like actually understood growth, understood entrepreneurial execution, and could actually work at that pace. So I'd say that's probably, in the early days, the biggest challenge that we had.
Where are you finding those professionals? What's the secret sauce?
Filtering.
A lot of
I mean, we filter a lot. I mean, for every position we fill today, we probably look at upwards of 100 candidates, interview probably 30 to 40 candidates. So just a lot of filtering.
So you know, the last section, CB Insights encourages moderators to do this underrated, overrated game.
Okay.
So I have a list here of terms that I'm going to throw out to you, and you're either going to say underrated or overrated. You're welcome to add in a little bit of explanation if you'd like. So the first one, Amazon.
Probably still underrated, if that's possible to say, whatever, a plus minus trillion market cap.
Interesting. Personal loans.
Personal loans. Huh. I would say overrated from the perspective that there are so many players there. When you look at pricing for risk, I think that people aren't pricing for risk because there's just too much capacity in that market.
I guess from a capacity perspective, what about the US market?
The US market, generally?
Just US market.
The US market's a phenomenal market. It's the largest single market. Actually operates more as a single market than any other supposed single markets. I would say, you know, always underrated, because the US market continues to be the deepest, the largest, and continues to grow.
What about cabbage?
I'd prefer not to comment.
I guess I did good if I found one like that. Fintech conferences.
Way overrated, except for this one, of course. Far too many fintech conferences.
What about blockchain for lending?
Interesting. I would say that if you think from the hype perspective, I would say the hype has been probably, there's too much hype, so I'd say overrated from a hype perspective. From a practicality of what's actually been delivered so far, way underrated, because I do believe that blockchain has a place in lending, especially when you think about sort of the whole perfecting security process, etc. It just requires so much change in the plumbing, which I believe will happen over time. So I do think it's underrated from what's been delivered, but overrated from a hype, which, by the way, is I guess, the typical profile that things go through, right?
What about business travel?
Business travel? Hey, it's totally proportionate to the results that you get. So if you get the results, then it's clearly underrated. If you don't get the results, it's way overrated.
Okay, now we might get into...
But as a comparison to video conferencing, for example, I would say that for client interaction, I just think that there's nothing like sort of face-to-face.
What about European venture capitalists? Tell us what you really think.
Okay, what I really think is, if you actually go back, I think European venture capitalists have got better simply by a factor that so many of them have lived through actually a whole generation of companies being started and actually having evolved and grown, and therefore they actually understand more company building than, let's say, they did even 5 or 10 years ago. My gripe always is, as a venture investor, and look, I was a venture investor very early in my career, and I stopped because I was clear that I wasn't worthy of being a venture investor until I'd proved myself as an entrepreneur, although I had a few good successes. But I would say that European venture investors are getting there now, but they weren't there 5 or 10 years ago. But I think upward trajectory.
And we have time for one last one, and this has a whole new level of meaning for me. What about HSBC?
Way overrated.
Rishi, thank you very much.
Thank you, Zach.